Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on Tuesday, October 8th in the evening after the market has closed. And Tilray closed at a price of $1.65, being flat on the day, but then going up about 2 cents in the after hours, which is around 1.2%. And so, yeah, just going to go over the chart here real quick before getting into the unusual whales data. This is kind of like a series that I'm doing leading up to Tilray earnings on the 10th. This, for me, is a short-term play. I do have some calls. I do have some shares. I'm risking less than $100 on this. And, my thesis is that this will be breaking out to the upside, potentially heading up to $2 a share. But if it doesn't, I do have a stop loss. I am managing risk. And really, I am doing this trade because I saw, a nice stop loss level that I could use. I don't want to be selling shares at that level. But if it does hit that level, I do think that we could be heading back down to around $1.50. And if we head down there, I think we could be heading lower. But, I don't think that's going to happen. I think that the low might be in with today's low of 164. And, that is lower than the low from yesterday on the 7th. We hit a low of 165, closed at that low. And today we did close at that price again. But I think that we could be putting in a bottom very soon and that we could be launching. But again, if I'm wrong, I've got a stop loss. I am managing risk. And, while I do think that this is probably a good investment moving forward, longer term, I think that there's just going to be a lot more progress as far as legalization of cannabis and whatnot in the U.S., around the world. And so I think that news, as this does progress, the value of Tilray Brands and other stocks like it, I think will just be going up. But for me, this is a trade, and I could see price going up to $2 a share. And so that is what I'm playing. And so the expiration for the calls that I hold is November 15th. I do not plan on holding them even into November. I plan on taking profits before then. And maybe if this does play out well, I'll hold on to the small number of shares that I do have, just to, hold on, have fun. If I make more than when I put into the shares on the calls, then, might as well just hold on to them and see what happens. But I personally just want to get better at in and out trades, swinging for whether it's 10% profit, 20% profit is what I have been doing lately with options, or, maybe notably more than that, going up to, $2 a share from around, 170, 169. That's 19% to the upside as far as the shares go, but the calls that I have would probably go up potentially 2x. So I'm just trying to do this swing and just wanted to document it here. And so with the close for today, sorry, just kind of rambling about that. With the close for today, we did dip down to this purple solid trend line. Did go over these in previous videos, so I'm not going to go over them again. It is discouraging that we got rejected from the purple dashed line, and this is our second close below it. But since we did not close lower than yesterday's low, we closed at the exact same price. I don't believe that is confirmation of a breakdown, and it does look like there's a spinning top there, which could suggest a reversal, or that a reversal is around a corner. It really just suggests indecision, price trading around here, big wick up, big wick down, not really able to determine a direction there and being flat on the day. This could be worse. We could have closed at 164. I was actually concerned about that. And then I would think that that is confirmation of this breakdown and it's likely going lower following earnings. But we didn't see that. And I think that 164 may be the low, or at least I'm hoping it is, because we do have this low over here from September 6th, which was $1.62. And that's partially why I have a stop loss right around that level. My stop loss for the shares that I have, which is only 10 shares, not a big position. I just wanted to have them. So I have that stop loss placed, and then I can navigate what to do with my calls. if that is hit. And so, yeah, 162 right here where this red line is, my stop loss level is 160, just in case, we wick below this level or something, or go below this level. If we test 162, I would hope that 160 is just low enough that it would not get hit, order would not get filled. But if we do break below 162, that in my view would be putting in a lower low, because we got this line here at 162, and then if we go back in time, I am not considering this low here from, let's see, August 12th. My understanding is orders weren't filled there. That was just kind of like a bookkeeping thing that, ended up being on the chart. And so I'm not factoring in, 150. The low that does stand out to me is the low from over here that was hit on, let's see, June 25th, as well as June 26th. We hit a low of 161. So with that being the low, ignoring this 150, we have the low here of 162. That's a higher low by 1 penny. And right now we're putting in a higher low by 2 pennies at 164. So I'm hoping the lowest that we go is 163, and then we start to break out. And so that is why I have my stop loss at 160, because I don't think it's going to get hit. But if it does get hit, then, we've hit a lower low. I think it could be coming down to 150. If it comes down to 150, which I believe is the all-time low, at least the 52-week low, if we come back down to that, I think we could be going to 140. I think the floor could be pulled out from under us. And, this for me is a trade. It's not a long-term hold, although I feel like at these prices, it is a great long-term hold. I had previously talked about $1.70 seeming like a very good dip buying level. It has been in the past, but currently we're trading lower than it. So maybe that's not so great, and that we could be bumping into resistance there. But yeah, I think this could be going up to fill these gaps here at $2.47, $2.59, getting up to $3 and beyond. But for me, like I said, this is, a month-long trade. And then, following this trade, I want to do another one. I think I might look into, Celsius Holdings, the drink, because I've seen some others posting about wedge pattern, and those others being Gareth Soloway from Verified Investing, as well as Mr. Chart Norris on X. And yeah, it just seems like a pretty clean pattern, and then I could just get some calls that are dated sometime expiring in 2025 and could then trade that. So I just want to get in the practice of trading for ideally at least 20% gains over the course of a couple weeks. And then, starting to compound those gains and just getting into this rhythm of not, getting distracted by all of the stocks that I like, but just focusing in on in particular plays. And so Tilray is serving as, kind of a trial for me with this, and doing like a daily video, going over the chart and going over unusual whales data. And so, yeah, I think that this looks like, it still does look pretty good. I would like the MACD to be going less negative. But let's see, yesterday on October 7th, the histogram, the numbers right here, were negative 0.0038. Today, they were negative 0.005. So it's getting more negative. RSI, let's see, yesterday was 40.69, still 40.69. So it's flat. Maybe that means it's getting ready to start turning around and price to go up, but not just yet. And so tomorrow, the 9th, that is the last day before earnings. And so what I am probably going to do is I'm going to see what's going on with the chart. If we're breaking below these levels, if we hit a low that's lower than 162, if we close below 162, if we hit 160, I'm going to sell my shares. I'll probably sell half of my calls. I might actually buy a put, just, to hedge against my position. Then, either way, hopefully I at least break even. And so I haven't done that yet. I'm only long right now. But if we do start to close multiple closes below these levels, closing below the lows, closing below 162, or just wicking below 162, I want to at least hedge, be prepared for this to break these levels because it could definitely happen. One could argue this is a wedge, but you could also argue this is a descending triangle where it's, the descending line here that's resistance, the flat line here that's tested multiple times. The more times you test the level, the weaker it gets. You're more likely to get a breakout. And since this is descending, you are testing this level, but as far as horizontal levels go, they are becoming lower. Whereas this is just staying the same, so that same level is just getting weaker and weaker. So I could see this breaking. But so far, there aren't signs that really suggest to me that this is not breaking out, that this is breaking down. But maybe I'll see that before close tomorrow and pick up a put. But anyways, I am going to now look over at the unusual whales data, which is really not that exciting for today. Actually, this is the 1 minute candles. I'm going to switch over to the 5 minute. I think it's a little bit easier to see what's going on. So the yellow is the underlying stock price, which it does show that the end was at 164, but we closed at 165. And this really just ranged from like 164 up to 166. Is that right? The high 168 actually. So you just can't see that on this line chart. We can see that, calls in green a lot at the beginning of the day, and then it's just been kind of flat throughout. And so here for Tilray, we can see that this is for the date of October 8th. Volume traded was a little under 23,000, with a premium traded today of just over 300,000, and the net premium was an increase of almost 12,000. If we look at the puts and the calls, we can see that number of puts traded was 2.2 thousand versus calls, which was 20.58 thousand. So, 10 times, basically 10 times, or is that 9 times the number of calls as puts traded. The amount of premium traded for the puts, almost 24,000, whereas with the premium on the calls, 284,000. So a lot more money on the call side. And then if I do scroll this down a little bit, you can see that we do have the percentage sign on the bullish side. So there were more bullish trades made today as far as the options go, but it's only 49%, which I guess is, it's 150,000. I believe that's premium. And so that's, let's see, I can actually look at, the premium up here. No, that would have to be, let's see. Yeah, okay, yeah, because calls or puts could be traded on the bullish or bearish side. If you're selling calls, that's bearish. And so this is saying that of the contracts traded today, about 151,000 were bullish, 139,000 were bearish, and 18,000 were neutral, 49% being on the bullish side. So while it doesn't seem like a majority, because it's less than 50%, because of that neutral, it is a majority. But still, it's not that compelling. It's not, a ton. And then if we do scroll down here, we can see the hottest contracts, and it does look like calls. The $2 call for this coming Friday, the 11th, that was the hottest contract, and that was on the ask side, so people buying those calls. So that is pretty good. It's a good sign. People are bullish. And then another one, which I think is a safer bet if you're going to do kind of a short dated call, is the $2 strike for October 18th. So not this Friday, but next Friday, 84%. The open interest for these two, 38.6 thousand for the 11th dated expiration, $2 call. And then the, open interest for the 18th expiration is 22,000. Volume that was traded today for the one expiring this Friday, over 5,000. Volume traded for the one expiring next Friday is 2.7 thousand about. The next one down on the list is a put expiring this Friday. That's a $1.50 strike, and the majority was on the buy side or the ask side. So that is betting that the price will go down. But if we look at the open interest, only 4,000 contracts, volume traded only 1,200. So, less than half of what was traded for the $2 call that expires next week. So, overall it seems more bullish here. Yeah, pretty much all of this is bullish other than this put, but that's actually pretty small relative to these top two ones. So I think that looks pretty good. The highest open interest contracts, we see the top four are calls, but this $7 call or strike, this call that expires on January 17th of this coming January, 100 days away, that's 98% dumping it. So that is, that is not so great, but the volume traded today was 105 contracts, whereas open interest is 62,000. So, that's pretty minor. I don't think that's anything too crazy. And and so I'm just going to look at a couple other things in the chart up here. First, I'm going to switch over to the, let's see. I guess I'll just switch over to the 7-day chart. These are now the 30-minute candles. And so we can see that the majority of the calls that were traded were on, October. I believe this is 3rd. And then this is the 4th. Yes, that must be right. Or September 30th. And so, the number of calls traded today, contracts traded today, not a crazy amount. We can see that the number of calls traded, the premium is, over $5 million, whereas with the puts, less than $500,000. So, and we can see here that, the price has come down. And with that, a thing that I think is pretty interesting that we can look at is the net premium. And so this is, reset to zero every day as far as I understand it, as far as the green calls or the red puts net premium. Each day that's kind of reset. And so what we can see is we did see this pretty massive spike in calls over here. The premium went up a lot on the 3rd, came down a little bit, on the 4th, but this went up to the, I'm just trying to read this right. So the y-axis over here, net put call premium. And so we can see that this went up to, over 1 million. But then the following day it came down by, almost 400,000. So still, this is elevated. As price has been coming down, that has remained elevated. And, as prices come down, the call premium has been going up. So I find that actually pretty interesting. The price goes down, but the premium goes up. So that means that people are betting on this going up, as far as I understand it. And we can actually zoom in on that a little bit. If I just switch this over to the 1-day chart, price is actually, maybe I want to look at this on the 2-day. Maybe that's a little more informative. We do see, price has just been coming down. And then here, with price coming down, we've seen call premium going up. We didn't really see it come down. It was net positive by the end of the day today. And so even with price coming down over the past 2 days, the call premium has gone up notably, whereas the put premium has more or less stayed flat. So that makes me think, maybe a bunch of people holding calls are going to get rugged. So that is also, a possibility. Do brace for that, because the net call premium traded today on the 8th was under 12,000. And so but that's and this is for all contracts. And one YOLO, as defined by Wall Street Bets, is $10,000. So net premium traded today of just over 10,000. That's one person on Wall Street Bets YOLOing. Not a big deal, nothing to be bragging about. So something to consider there. If this is like $1 million, then it's like, whoa, let's be paying attention to that. But anyways, I think that's enough on the general contracts. I am going to look now at the contract that I hold, which is the $2 call with the November 15th expiration. And so we can see that this data is for October 8th. And so what we can see is the number of these calls that were traded today. 142 were on the bid side, and 748 were on the ask side. So that means that about 142 contracts were being sold, whereas 748 were being bought. And so that's net positive. That is good. And so we can also see that we've got this total volume. If I were to add these numbers up, we would get 945 contracts. And the open interest for today, so that's at the start of the day, was 17,890. And I'm not sure if I left the number up there. Yeah, I zeroed it out. But what I was calculating yesterday, what I thought would be the change in the volume. So you could look at yesterday's video and see if I calculated that correctly. I was probably off by a little bit, but it's really just to be kind of approximate to get an idea that the open interest would be going up into today. And then we did see that, which I'll go over in just a minute. But looking over at this chart here, we can see that the total premium on this contract, which in my view is not really the most popular contract, is just not that exciting because it's not this Friday. It's not next Friday for monthly October contracts. It's the following month. And so I feel like it's probably just not that spicy of a contract, so it's not really getting that much traded on it. But yeah, about less than $10,000 traded today with this contract, which is less than one YOLO. So do consider that. We can see that it was pretty flat on the day, and this let's see, came down to. I feel like I was looking at. Oh yeah, never mind. I was thinking about the price when I was talking about the highs and the lows, but here we can actually see. Rather than just, approximating it based on the points up here. Well, it looks like the range was from about 9 cents up to 11 or 12 cents. But if we look down here, we can see that the low for the day was 9 cents. The high was 11 cents. Unfortunately, my buy order at 9 cents was not filled today. So, I didn't buy any contracts. I didn't buy any shares today. And here we can see that 79% of the contracts traded, as you might expect, given the green up here and the little bit of red, 79% were on the ask side, so 79% were going long, going bullish with Tilray. And so we can see that there was an increase of 134 contracts from yesterday into today. The open interest increased from 17,756 to plus 134, which is 17,890. And so with, let's see, the volume traded today being 945, which you can see up here, we have, let's say all of these were on the bearish side, so only 748 were going long. So if I do pull up that calculator, we can see that the open interest now, from the start of the day was 17,890. And let's see, if we have 945 total volume, for the day, but we only have 748 going long, I can add 748 to this and then subtract the bid side. That's going to be minus 142. And then let's assume that the mid is all selling. And so I screwed this. Did I screw this up? No, I did not screw this up. Okay, so and then minus 55. And so that is 18,441, which is an increase from today's open interest, which was 17,890. So going up, all these contracts could go to zero though. I'm prepared for that. That's why I have the stop loss at 160. I don't want that to be hit. But if it is, then I will sell half of my calls, which the number has not gone up. I believe I have 6 of them. I am risking less than $100 on this. And what I might do tomorrow, I haven't decided. I'm not working, so I can be looking at the chart just before close. But what I might do, since we do have earnings, after tomorrow's trading day, so that's, pre-market on Thursday, if it's looking bearish, I might buy a put. If it's looking bullish, and if my 9-cent limit order and my 8-cent limit order for the calls are not filled, then I might just add one more call at 10 cents before close, and then to hedge, I might buy one put. We can actually look over here at the options table. And so what I would probably do if I'm to be wrong and I wanted to hedge, I would probably buy something that's short dated because it would be cheap. And, so I could buy a put I could lose money if this goes the wrong way too. Because if I buy out of the money calls, this for the expiring this Friday, I could, buy out of the money calls. If it still closes above 150, these would then go to zero. Or sorry, puts. I'm looking at puts here. Sorry about that. And so the $2 put for this Friday, to buy it is 38 cents. And so that's basically saying that, if it closes at, $2 minus 38 cents. So that's like 162, I believe. And so we're basically right around there. So, this could not change that much. So, yeah, I don't know. Maybe I'd want to do something that's dated, also on November 15th. So if I wanted to get the 150 put, maybe I could get some of these just to kind of hedge. Maybe I get a couple of those. 15 cents. But I don't plan on doing that, but I just think that if this does start to break some levels and my stop loss is not hit by, tomorrow, the end of the day trading, then maybe I do want to hedge if this is, just going to 162, wicking to 162, but then going above. That seems a little bit bearish to me. So maybe I'd want to hedge. But yeah, like I said, I'm risking less than $100. If I were to hedge with a put, I'd be risking more than $100, or puts, I should say. I'd probably get more than just one. But that would be to, kind of cancel it out if I'm wrong. And, so that's what hedging is. It's not too exciting, but I feel like this is, it's risky trading contracts around earnings. It's a total gamble. And so my contracts could all be going to zero. But that's why I have the November 15th expiration, because, I got some time to work with it if I am wrong, which I'm sure I am. In all honesty, I'm sure I'm going to be, because whenever, it's like, whenever you put money on something, you end up being wrong. But, we'll have to see. I'm excited about it. I look forward to seeing how it trades tomorrow. And I'm hoping that the low is in at 164. If we don't hit lower than 164 tomorrow, I think that looks really good. If we close above, let's see, what was today's high? 168. That would be basically reclaiming this purple trend line. I think that would be great. And then we could be, launching out. Maybe we get stopped, around like 190 at these trend lines. That's quite the possibility. We don't get to this gap right away. But, that's fine. So, yeah, I'm looking forward to seeing what happens on earnings and, whether I hold contracts, the shares, or, I cut losses, or I just trim out of the positions. I do have limit sell orders. I guess I will let you know. Placed, since I have been at work, not tomorrow, but just so you're aware where my limit sells are for those calls. Let's see. I have a limit sell at 14 cents, a limit sell at 15 cents, and a limit sell at 16 cents, which I believe with my average, I have 6 contracts with an average of 11 cents. So that's, that's like, I think 20, 30, and 40% profit. But, it's really, just like dollars between them. It's nothing crazy, but it's just trying to practice this discipline because I want to, it's like paper trading. You could be doing this without any money. And like, so, I mean, if you're following me doing this and you're not doing these trades that I am, that's, paper trading, learning from, how it goes without putting money on it. I'm putting a little bit of money on it, but I want to graduate to not just doing $100 on a trade like this, but 1,000 and then 10,000. And then, that 20% on 10,000 is, $2,000. It's a good amount of money for, a couple weeks, one trade. And so that's what I want to be working towards. And this is really just practicing that, focusing on one chart, going over it, and sticking to the plan. And that plan is a stop loss at 160, limit sells of half of my calls at 14 cents, 15 cents, and 16 cents. Beyond that, I'm not adding any more. And if my limit sell or my stop loss is hit at 160, then I would sell half of my calls at a loss just to take some of that risk off the table. And, then I'm not risking losing all of the $100. I'm risking only losing whatever percentage of that. So this is really just to practice that discipline to apply for other trades. And, I feel good about Tilray, so this is an easy one. It's a fun chart to cover. And I think that this, I have a little bit of money, not a lot of money, but some money on this going up to $2 by November 15th. But I will definitely probably be closing those calls before the end of October if they do go green. But anyways, this is about 30 minutes long, so I'm going to end it here. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Take care, you guys.